Today, payments giant Fiserv launches its own stablecoin. Anthony Pompliano plans to take a Bitcoin treasury public by a SPAC. And Pete Najarian of RW3 Ventures breaks down the crypto market's reaction to the U.S. strikes on Iran. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are recovering from a weekend sell-off driven by those U.S. strikes on Iran. Now, Bitcoin fell to $98,000 after President Trump announced the targeted strikes on Iranian nuclear sites Saturday. But as of noon Eastern today, the cryptocurrency bounced back to $101,000. Ether rose to $22.49 and Solana climbed back to $133. Now, over on Wall Street, shares of Circle continue their meteoric rise. The stock's up 20% so far this morning. Stablecoins continue to gather attention from traditional finance, and Circle is a major beneficiary of that excitement. Now, prices are changing quickly, so head over to CNBC.com for the latest. Okay, let's stick with that stablecoin trend as we hit our top stories. Payments giant Fiserv announcing a new digital assets platform and a stablecoin to match. FiUSD will be pegged to the US dollar and launch using infrastructure from Circle and Paxos. Fiserv already processes around 90 billion transactions a year, coming from 10,000 financial institutions and 6 million merchants, and it hopes to bring many of those transactions into the crypto ecosystem. Next, another Bitcoin treasury is headed to U.S. markets. Anthony Pompliano's ProCap announced that it will go public in a SPAC deal with Columbus Circle Capital. Now, that deal includes raising over $750 million for the new venture. ProCap intends to hold $1 billion worth of Bitcoin on its balance sheet and offer a Bitcoin-native financial services platform similar to a Goldman Sachs or Cantor Fitzgerald. Now, this comes as public companies like Strategy and Trump Media have adopted or announced a Bitcoin treasury plan of holding Bitcoin on their balance sheets instead of cash equivalents. Still, there are some holdouts to this corporate Bitcoin buying strategy. Meta allowed shareholders to vote on the proposal in its latest annual meeting. Less than 1% of respondents voted to hold Bitcoin on its balance sheet. All right, for our main story, let's talk about the market reaction to the latest out of the Middle East. I spoke with Pete Najarian, managing partner of RW3 Ventures, about that and how crypto startups are reacting to the latest geopolitical and economic uncertainty. So let's actually start with your reaction to what's going on in the market right now. You've got Bitcoin bouncing back from a sell-off this weekend driven by that U.S. attack on Iran. Investors seem to be shrugging off their initial reaction to the news. What's going on here?
I mean, it's really an interesting time. Historically, if you'd had, macro events that were not remotely of this caliber, you'd see Bitcoin trade off dramatically. And we're entering a period, and this has been much discussed in the markets, where it really does feel like we are into higher lows. Certainly, the volatility is lessening, and there's a little bit of a double play here with Bitcoin, where the store of value use case is becoming more and more real in an environment where you have a big macro event and there is a race to a store of value. Bitcoin's benefiting from that. And in an environment where it is risk on again, Bitcoin's also benefiting from that. So we're definitely entering new territory. I think that's for a bunch of reasons, but I would argue that volatility, the market will continue to rally and volatility will continue to lessen over time.
From a VC point of view, there are a lot of questions in the air, from geopolitical uncertainty to economic uncertainty. Is any of that playing into the crypto startup space? And are there any areas that are being especially hit by these factors?
I think that we had a great first quarter. Interestingly, in the first quarter, the majority of the money actually flowed into later stage opportunities, and that hadn't happened since late 2020. And most of the later stage capital is actually flowing into what are crypto related financial services plays. So, and you're seeing that also play out in the public markets. I think the Circle IPO was kind of a seminal event for the industry. There was a time when, not many months ago, when I think Circle would have been happy to IPO at a $5 or $6 billion valuation. Today, it traded above 60. So, this is quite a robust time, particularly in financial services. And And we are seeing more capital flow into later stage opportunities than kind of pure pre-seed and seed opportunities.
And speaking of Circle, an announcement this morning from Fiserv saying that they would be working together on a dollar peg stablecoin that the fintech firm will be issuing. Talk to me a little bit about these stablecoin wars, especially now that we have a lot of established fintech players entering the market with the expectation that pretty soon that Genius Act or some form thereof will be passed into law here in the U.S.
I think it's important to not count the incumbents out. So you've got two big horses in the race today, which is Circle and Tether. You have a big universe of startups really globally that are trying to attack either the US dollar tokenized space or the emerging market tokenized space. But at the end of the day, it's pretty easy to commoditize this technology. And I do believe that those that have the customers are those that are likely to win over time. And as you see big tech incumbents and even big financial services incumbents talk about launching their own stablecoins, I do believe that having a big customer base, like in the case of a Meta or the case of a JP Morgan or some consortium of banks entering the space, is going to have a huge impact. I think it'll be harder for the startups to get that flywheel spinning. I do believe Tether and Circle are in a very strong position. It's going to be interesting to see how that plays out as big established groups from other industries that have huge customer bases already offer the same technology.
Now, stablecoins and these publicly traded Bitcoin treasuries seem to be all the rage right now. Why is that getting all the attention?
I think when you think about financial services, well, first of all, the big unlock for all of this, in our opinion, is financial services moving on to blockchain-based architecture. And there are kind of three legs to that stool. One is store of value. And we would argue that Bitcoin is winning the digital store of value use case. Another is payments. That's where the stablecoin businesses are robust and growing. And really, it's very, very early innings of that space. That's cross-border payments and also micropayments and domestic payments. And the third, where the biggest opportunity is the origination, trading, settlement, and custody of financial assets. Bitcoin won the first leg, in our opinion, some time ago. That's continuing to be proven, again, on days like today when there are big macro events happening. Tokenized US dollars are leading, which are stablecoins, are leading the second leg of that stool, and it's happening quickly, as you know. The third leg of that stool, which has yet to play out, and it's early innings, but with comprehensive crypto legislation will play out, is this whole universe of tokenizing financial assets. And so we're just going through that process, right? So stable coins are an easy first use case, or second use case rather, to embrace. It's great technology. It works seamlessly. I think this is a pattern this is a process to move from the importance of store of value, the importance of payments, and then ultimately into the importance of tokenizing financial assets.
Now, when we talk about regions that are most enticing for startups, the U.S. used to be pretty far down that list. Regulation by enforcement was a concern and so on. We're now 6 months into the Trump presidency and a lot of changes on the regulatory front. Have you seen that tide begin to turn? Are startups coming back to the U.S.?
I mean, it's kind of amazing how dramatically the tides turned, right? Like you talk about regulation by enforcement. We were living in an asset class or in an ecosystem that was truly fearful of getting, that tap on the shoulder from the SEC for any number of kind of lanes of interest that you could be building in. It's literally a 180-degree turn with this administration. If you think about like what the North Star would have been if we had this conversation some years ago for how the crypto ecosystem can unpack and really develop over time, it would have included regulatory clarity truly embraced by the US. It would have included the approval of ETFs. It would have included institutional adoption, ultimately would have included sovereign entities adding crypto to their reserve currency baskets. All of that's now happening. So the change of administration is a more dramatic thing than I think most people outside of our industry understand. And it is without question bringing a host of builders back into the U.S. that had actually gone overseas for that fear. And it's bringing great founders into the industry into the space from a bunch of different industries. I think it's actually very early days for some very exciting things to unpack.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.